My man Ryan, how we doing this afternoon?
Producer AB, how you doing, man? How's everyone doing?
I'm good. I'm good. It was good to see that spy green after a couple red days.
I know, right? It was nice. I mean, I don't think we're out of the woods. I don't think we're out of the woods by any means yet, but it was a good little burst of green. I mean, small caps are still hurting, which is unfortunate because I know a lot of our viewers are penny stock and small cap traders. But for our large cap traders, I think they had a little bit of relief today. Some of the earnings were a little bit ugly in the after hours, like Rocket. I think we could touch on those, but I want to talk about PayPal, which did phenomenal, and look forward into some of the earnings we'll be having tomorrow with bigger names like Square, Penn National. I'm very excited for Penn, so I'm looking forward to talking about all of those.
Yeah, I know we got Roku and AMC tomorrow as well, so we've got a couple different big names tomorrow. So those will
Yes,
definitely be
sir.
interesting to watch. Well, all right, let's see. Is there anywhere in particular you'd like to start?
Let's start off like we always do. I'm going to jump into good old SPY. Let's go to the SPY chart. I want to point out my little theory on how I think our bull market for 2021 will work out this year, just based off SPY. So our MACD still, our RSI is flat, which is not a good sign in my opinion. If you look at all these little candles here, we've essentially had really flat days. We had a 0.3% day, but then we gave it up in the after hours, which is unfortunate. I'm just going to go this page real quick for a second so I can zoom in on one thing here. So these little candles here show a lot of indecision to me. It confuses me a bit as to like what's going on there with those. So to me, I'm like, all right, what's going on there? Why is there so much indecision? We know yesterday what happened with Janet Yellen. Everyone's talking about this. How in the morning they were like, we have to raise rates, and then right at market close, that they said, oh no, we're not going to do that. We're going to wait a little bit. So there was a little bit of indecision on their part, which caused a huge market sell-off yesterday for a lot of different individual stocks. The actual S&P 500 wasn't affected too but bad. It was essentially another flat day. I consider under like 1% a flat day, and it was weird. It was really weird. It was a lot of indecision that was not needed. The comment shouldn't have been made. Apparently it was leaked. Apparently it was leaked to hedge funds earlier, so they began selling off beforehand. So again, this is all alleged. We have no idea how it all played out, but we'll have to see how everything goes. I'm really, really curious to see how this plays out. But the big thing that's still worrying me, we've spoken about it on the stream a lot, is this gap here between 400 and 403. I think what's going to happen is something will trigger this sell-off here, probably something like a jobs earnings report or inflation data that we're getting next Wednesday on the 12th. So I think something's going to trigger. We're going to come down here, fill this gap, maybe come a little lower or somewhere in the middle of the gap, and then finally start our bull run into the summer with this. Now, I know summers are traditionally slower, but we've really had a really slow year, which is quite unfortunate so far. Slow, quote unquote, compared to what we had in 2020. But I think that we will catch up to a certain point and start moving again, because there is a lot of money infusion into the economy that's happening, a lot of growth that's being built in that we're not seeing the side effects of yet. And the indecision and fear around inflation rates, around unemployment, around a lot of different things is what's causing a lot of different sell-offs and stuff like that. Producer AB, is my audio coming through good? I have the mic in a different spot today, so I'm not touching it. You're on mute, buddy. Producer AB? Okay, I don't think you can hear me, but if anyone's in the chat, if my audio is coming through okay, just give me like a 1, and I'll know that the audio is coming okay. But I'm going to keep going for now. So that was SPY. So I'm going to talk about, we had some good earnings. So I'm going to show you folks something really, really cool that the Benzinga folks have been putting together every single week. Beginning of every single week is this earnings chart. Everyone has access to it. It's 100% free. You can download this, save this, bookmark it. I like to bookmark it and kind of highlight what I'm doing. Is it better now? Okay, so I'm getting ones in there, so that's good. So I brought it a little bit closer. So here we go. After the close, we had Rocket reporting today, PayPal reporting, Etsy reporting, and Uber. These are the big ones here. Twilio could be big as well, but we'll touch on. I want to go through them first. First, I want to jump into PayPal, because PayPal is big, because PayPal is one of those fintech companies that can be an indicator of how we can see Square reporting tomorrow. PaySafe reporting, in these different companies that are in that same sector. So let's jump into PayPal's chart real quick so we can kind of figure out what our next steps are moving forward So we'll take it from there. So PayPal, it looks like in the after hours we are up 4%, which is great. I'm assuming that earnings went well. So let's go to news and let's take a look at all the earnings data that came in. So here we go. Earnings climbing, earnings. There we go. So they beat, which is good. So there's adjusted EPS of 1.22 versus estimates of 1.01, which is great. They beat it. Fantastic. Sales were 6.03 billion versus 5.9 billion, which is good. I'm really curious to how much of this accounts for their move to crypto and adoption of crypto into Q1, because we know in the beginning of the year, PayPal added Bitcoin and Ethereum to their ledger of being able to buy and sell using those assets. So I'm really curious to see how much of that had an impact on this movement that's happening here with this. And it looks like their guidance is being raised from 17% to 21%, which is good. That's a big bump in guidance. And their sales are going from 25.5 billion to 25.75 billion versus the 25.71 billion. Okay, so it's a little bit, but again, we're talking in billions of dollars, so it's a big deal across the board. So this is good. Looks like it says there's a price spike down. So let's go to the chart real quick. And let's go to the 1 minute chart. Let's do the 5 minute chart, not the 1 minute chart. Looks like we spiked up. I'm not sure what that is. I guess maybe this one candle had like a really downbeat effect, but I guess people came through and quote unquote bought the dip. So it came back up. So I think it's good. It had good earnings. It had good guidance. I don't see why it would sell off. But then again, we are in earnings season where unfortunately a lot of these different companies have been coming in and have been having great earnings that we saw, like Apple had smashing earnings. All these other companies had really good earnings, but unfortunately they sold off. So we'll have to see. We'll have to see how that all plays out, and we'll have to take it from there and play that all by ear. So we'll have to see how everything goes. I'm happy for PayPal. That's a good sign for me in Square. I don't have a position in PayPal. Again, I'm not a financial advisor. Any risks you take are your own. This is all meant for education, entertainment purposes only. Sorry about that. But I do have a position in Square, so this gives me hope that for tomorrow's earnings for Square, it's a good sign that, hey, we might have a really, really nice earnings going into tomorrow. So we'll have to see how that all plays out. I'm looking forward to it. If you're watching the stream so far, do me a favor, smash the like button. We're doing things a little bit differently today, trying to do a lot more fun stuff here today. So if you could do me a favor and smash the like button, I would really appreciate it. And we will jump into Q&A. Yep, and Naveed, we will definitely be talking about Etsy. We'll be talking about a lot of different stocks. Rocket is next. We got to go to Rocket. Rocket had a heartbreaking drop today. So again, for those that just came here, this is from the Benzinga Twitter account. Make sure you're following that. And we'll go to Rocket next. Rocket is a company that is interesting because I really liked Rocket long term. I had a position in Rocket a long time ago, but when that big short squeeze happened if we go back here, there was like a huge Wall Street bets short squeeze that happened that pushed the stock into the 40s. I sold off naturally because it hit my price targets for 1 to 3 years down the line. So I said, of course I'm going to sell. And I never really bought back in. And today I'm kind of glad I didn't. But let's take a look at the actual earnings and see how things played out with earnings and see how we will be moving forward into the next quarter. So adjusted earnings were EPS of it missed by 1 cent and people are freaking out. I'll never understand this. How do you drop 12.5% for missing by 1 cent? I guess, yeah, if you do the math, it's impactful, but you just missed by 1 cent on an estimate. Sales were good. Sales beat. So that's good. QTC's closed loan volume of 82.5 billion to 87.5 billion, a net rate of 81.5 to 88, a margin gain of 2.65 to 2.95. So margins, they're doing better on margins, which is good. So the stock took a dip. Let's take a look at the chart. Let's see what's going on. Maybe this is a buy the dip opportunity, quote unquote. Again, not a financial advisor. I want to keep reiterating that for you folks in case anyone buys based off of the stuff we say here. I'm not a financial advisor. This is all up to you. So it looks like right as earnings came in, you saw a huge dive. And again, we're in a market right now that is overreacting, which is unfortunate. Every little thing that happens, it triggers an overreaction. We saw it yesterday with the Janet Yellen comments. Remind you that Jerome Powell is the person in charge of these things, not Janet Yellen. She can make suggestions, but Jerome Powell is the person. Sorry, I hit my keyboard. Jerome Powell is the person that is in charge of making these decisions. So it's an overreaction, I think, in my opinion, for Rocket. I don't think Rocket's a bad company. I like them more than United Wholesale Mortgage, just because that they have such a bigger brand name out there. And companies like this, especially in the real estate space. It's about getting your name out there. Like back in the day, it used to be 21st Century, which was the big real estate company. Now Rocket is slowly and surely taking their place in the new digital era of the 21st century. So I don't know. To me, this looks like a buying opportunity, but I'm very happy though. One big thing that happened here is if we go to the actual daily chart and we look at support levels for a second. So I'm going to actually just go to these. We can ignore the RSI and MACD, but if we go to like support levels, $20 area was the support level, and it only broke it by a few pennies. So we did not, it is not a dramatic drop. It looks like we had a run up into earnings, and then that run up just sold off. It looks like people were expecting an earnings beat for it to continue to keep shooting up, and then they would have sold off. So it looks like this was an inevitable sell off, and this stock will probably be sitting in the 19 to 20 to $20.50 area for the next few months until next earnings comes out, where they will hopefully beat. But we'll have to see. One other thing to also take into account, real estate is in danger a bit. The new Biden infrastructure bill tax plan initiative gets rid of the 1013 tax gift benefit, whatever you want to call it. I'm blanking on the name right now. For homeowners who have investment properties, you can no longer. So how it works is, again, I'm not into real estate. I don't know much about real estate. I'm actually learning about real estate now. But the small amount that I'm learning and knowing of now says that if you buy an investment property and the investment property is, let's say, $500,000, and I find another property that's $700,000, and I want to go from this property to that property and kind of swap up, I don't have to pay the taxes on that property immediately. But now the new thing that's happening is maybe that will be limited to a certain amount of money. The guidelines haven't fully come out. It's still in the rumor phase. So real estate could be affected dramatically by this bill as well, in a negative light versus a positive light for other stuff like EV cars and EV chargers. So if you're in this space, if you're in this stock, you need to keep your ear to the ground. We say it on this channel all the time that you need to kind of keep politics, even if I don't care if you're on left, you're on the right side, you have to keep your ear on the bills. The bills that come out are what affect the market, and all the rules and laws that come out are what affect the market, not who's actually sitting in the office space. It does affect that, but keep your ears to the ground if you're in plays like this, if you're in plays like United Wholesale Mortgage, if you're in real estate itself. So keep your ears there. So let's go to next one. Let's talk about Etsy. I promise we talk about Etsy. Etsy is a company that I have used once or twice, surprisingly. I like Etsy a lot. I like Etsy, what they're doing. I like the products that they have on Etsy. It's very homey. It's like a garage sale online to me, but it's not like a garage sale where people are selling their crap. It's more like a garage sale where people are selling stuff that are actually useful and actually really cool. So let's take a look at the actual earnings. So the earnings beat. What the hell? So the earnings beat and the stock dropped. Okay, that's weird. Let's see what happened. Maybe they lowered guidance. So earnings per share beat. It's $1 versus 88 cents, which was the estimate. Great. Their sales beat as well by 30 million and some change. Q2 sales. I see guidance. Guidance is still within range. The estimates for Q2 is 394, and the guidance that Etsy set was 493 to 536. So there's still some guidance in there that is on par to what'll be there. So I guess people overreacted because they didn't come in and say 500 to 536 million, which is smart on them, because sometimes it's a good idea to come in lower and say, hey, we might not be perfect. We might not hit that number exactly. That is the estimate, because the estimates are made publicly, I assume. And if you come in lower, and you could surprise in the stock and have a nice jump, and we can see from there. So I want to see what this Form 8 is. This is the 8K, I imagine, which has the actual numbers and the balance sheet. So let's take a look at this. So their GMS went up. Revenue, we know, went up. Revenue doubled. Revenue essentially doubled here. Take a look at this. It's 228 to 550, so it's sort of almost a double. Marketplace revenue went up dramatically. That could be also due to COVID. People might be selling off and saying, okay, COVID is slowing down. People aren't buying as much. But I think that we are an online-based shopping species now. It's no longer, very few times you're going to be able to, first of all, find stuff on Etsy in stores. There's places like Home Goods and maybe 21st Century, but those are all slowly fading into the wind as well. So Etsy is really taking up that whole market share. Profits are up almost 4x, which is great. Operating expenses are only doubled. So take a look at this. Operating expenses are doubled, but gross profit is, hold on, I'm sorry, I want to make sure I read it right. Gross profit is almost 4x, but operating expenses are only doubled. So that's good in my opinion. I think that's good. I might buy some Etsy. Hold on, let me see this. Etsy is on once. I might buy some Etsy. Well, I got to see how this plays out into the 8 p.m. close, but I think I might buy some Etsy. Their net income is up. I'm sorry, this is their net income. Their net income is up dramatically. Adjusted EBITDA non-GAAP is up. Adjusted EBITDA non-GAAP percent-wise is up, which is good. Active sellers, this is what really matters on a platform like this, is the amount of active sellers. It's like the daily active users on Facebook or Twitter. It's doubled. Active buyers is also doubled, which is you never want your active sellers to go up and then your active buyers to come down. That means there's more supply than demand, and you have price fluctuations, and then stuff goes to crap. But this is really good, really big jump. And then you have your mobile GMS is up, and your percent international GMS is also up. So they're getting their international buying going as well, which is good. I think this is good. I think this earnings is good. I think it's an irrational market sell-off again. Let's take a look at the 5-minute chart. Big sell-off here. This creates a good buying opportunity, in my opinion. If you're someone who wants to buy into Etsy, if you like that space, if you think that they're going to grow in a few years, which I think that they will continue to grow, look at the trajectory of their stock. Essentially, back in 2019, flat, and then when 2020 happened, COVID bootstrapped and launched their platform up. So let's see. I'm going to go through it together with you folks about how I would go about buying this stock. So let's see if we could draw some trend lines here. So we did break through this trend line, which we've held for a long time. We're sitting right on the 200 moving average of 167. We're 99 cents away from breaking it. Part of me, the cheap part of me that wants this stock for much cheaper, wants it to be broken. But again, I'd never want to root against the stock or a company because I know that there's shareholders that want this. But I know that over time, most people that are buying into stocks like Etsy and these large caps are buying them for long term. So let's take a look at this. So let me take a look now. Let me go to the 30-minute chart, so we can see how this breaks down. Yeah, we're sitting right on there. So I'm keeping an eye on this like a hawk because I want to make sure that if this 200 moving average is broken, which the 200 moving average is at 167. Again, we're at 168. We're only $1 away from it. If this is broken, then that means we will see a bit of a free fall because it would need to establish support again somewhere else, which I guess the next support level would be somewhere. We have a somewhat of support here, which is around the 130 area, which I don't know if it will drop that heavy. There's also support at 112. So I'm going to be watching it. I'm not going to be putting in a buy order right now onto this one, but I will definitely be watching Etsy because there's a lot of potential for it, especially a stock that drops this hard. The RSI is in oversold territory. We're at 27 RSI. I can't have the cursor here and there, but if you go here, if you look at it, the RSI is oversold. We're below this 30. We've talked about it on the channel. Oversold is when you're under 30, and overbought is when you're over 70. So we're seeing that. So it's a nice decline. I think this is creating a really, really good buying opportunity. I'm actually going to add this to my watch list right now before I buy it, so I keep an eye on it because there's a lot of different tech companies out there, and that we know are going to not stop growing. And a company like this, where A, they have good guidance, B, they are sort of establishing themselves in this marketplace, in this niche. I think it's a good stock, and I'm going to definitely have to check out and keep a close eye on that 167 support area. If that's broken, then I can't do anything about it. But tomorrow I want to watch that area, but it's oversold. So the algorithms are going to probably jump on it tomorrow too into market open. So we'll definitely have to take a look at it there. So let's see what else had earnings today that we didn't talk about yet. So we talked about Rocket. We talked about PayPal. We talked about Etsy. Uber. We got to talk about Uber. I heard Uber did bad and Uber's falling, and that affected our friends at Lyft. So let's take a look there, or was it vice versa? I don't know. Let's go to news. Yeah, Uber, Lyft, DoorDash shares are trading lower on reports that Biden administration is planning to block a Trump-era rule that would allow it to be made easier to classify gig workers as independent contractors rather than employees. So this is big. This is something that a lot of different people have not been talking about and haven't been acknowledging. It was in the ethos of the media for a while before COVID, was this whole gig worker versus employee mentality that a lot of these employees, if you're an employee, you get a right to benefits, you get a right to 401k options, stock options, maybe depending on what tier you fall into. And then there's the classification of a gig worker, which you just get a 1099 saying, hey, you worked for X amount of time for the company, but as a gig worker. So you're not technically an employee, you're not there full time, and you're not owed any benefits. So this is a big thing that Uber, Lyft, DoorDash, these type of companies that revolve around delivering stuff, moving around different crates and cargo and stuff like that use to be able to keep their bottom line beautiful and keep from having to spend too much money on different things that go into the space of gig working, because gig working has good margins. So let's take a look at it. So their earnings per share, they're still not a profitable company, which is weird for me. I would have thought that they became profitable by now. I guess I was wrong. Earnings per share is 0.6 versus 0.4 estimates, which they beat dramatically, which is great. Sales were 2.9 billion. Sales exclude the UK accrual of 3.5 billion. And this was versus the 3.28 billion estimates. Okay, so they didn't exactly do that, but if you include UK, they did beat. But you have to also remember that this is during COVID. This is during a time where people are not comfortable getting into cars with other people. I don't know what it is about it. I've seen more people say that they're more comfortable taking the New York City subway system versus an Uber, because it's an enclosed area where other people were just in like a few minutes ago, whereas like a subway station is a little bit bigger space, maybe better ventilated, even though I think in an Uber you could just bring the window down. But again, we're talking about stuff that's not really related to this. Gross bookings are up 24% year over year, which is good. 19.5 billion, which is good. I'll be honest with you, I've never been a big fan of Uber. I've always liked Lyft more than Uber, but in my area, Uber is cheaper. In New York, Uber is cheaper than Lyft, but I know in most places, Lyft is cheaper than Uber. But long term, I don't like either of them. I'll be honest with you. I think that both of them will be out of business in like 5 to 7 years. If and when, for me, it's a when, not an if. We've spoken about this a lot. The robo network, the robo taxi network for Tesla is rolled out. Tesla cars will replace Uber and Lyft. Tesla will launch its own system of robo taxis. Your car, you can buy a car, and then as part of your payment plan, you could set it up so between 12 p.m. and 8 a.m., your car goes out and robo taxis for you and comes back, and the money that it accrues will be used to pay off your car. So think about that. That's like one business model there. And of course, Tesla takes a chunk of it because they're facilitating these transactions. And maybe they throw in the self-driving package for you for free, or you pay for it at a discount. Because right now, self-driving is $10K. Just a few months ago last year, well, yeah, it's almost a year ago, it was $7K. When I first invested into Tesla, it was $7K. Now it's $10K. So that package is getting more and more expensive because there's more value being added to it. It's like these courses that people sell. The more information they add to it, the more value they bring, the more value that they've added to it. So to me, Uber is not a long-term hold by any means. I don't have any faith in it long-term beyond. I'd give it maybe one more year. I think Uber is unfortunately in a very, very awkward situation in place, where it's kind of the same situation in place that they put the yellow cabs and taxis in, where they came in with the new technology and they wiped those yellow cabs out. And I think that the same thing might and will probably happen to Uber and Lyft and these different style companies. They'll probably get wiped out. Lyft just sold their self-driving software to Toyota for 800 plus million. So I don't think that they have access to that anymore. But there's probably something built in there that they'll probably be working with Toyota. And instead of Toyota doing the self-driving robo-taxi network, once they set up their stuff, it'll probably be done through Lyft. That's probably part of the contract and probably why the software was sold for such a cheap price, in my opinion. If the software is viable to be sold, 800 million is nothing. Tesla's probably spending billions of dollars every single year on that software. But now let's go to an unbiased. I'm going to take an unbiased look at it and see how it's going. The drop, in my opinion, is unwarranted. I'll say that. But again, it's not the first time it's dropped. It dropped this morning. I think this was on Lyft's earnings. I think Lyft reported after close yesterday. I'm not sure how they did, but I'm imagining they did bad, because I could have sworn I saw a headline here on Benzinga Pro saying, hey, it's trading lower due to this. But let me just jump to Lyft. And I'll jump back to Uber in a second and go through it. Yeah, Lyft had bad earnings. Let me just double check. I don't want to talk out of my neck. Let me see. So much news between yesterday and today. Yeah, there we go. EPS of negative 1.31 versus 0.53. So they missed earnings. Their sales beat, but they missed earnings, which is unfortunate, which means they have a margin problem. EBITDA estimated loss. Yeah, it's not good. Earnings weren't good on that one. So I would say let's go to Uber again. Let's go back to Uber, because I know there's people in the chat that were asking about Uber. And do me a favor, folks, if you're watching the chat and watching the stream, do me a favor, smash the like button. We're going through a lot of different stocks today, and I'd really appreciate it if you guys smash the like button. While we're doing that, I actually didn't get a chance to share this on my Twitter feed. So let me just bounce this to the folks on Twitter, so that they can be notified about this. I know I retweeted it, but I wanna put this out there too. Live now talking Earnings. Uber. Rocket. Square. Penn. And I'm going to talk about what I'm going to go into next is after this earnings that we finish here, I want to jump into talking about earnings that we're going to have tomorrow because tomorrow's a really big earnings day as well. Tesla, I will talk about Tesla towards the end if we have time. And today, I think as of right now for Uber, and personally, in my opinion, I would watch it into tomorrow's market open just so we can close the book on Uber. It dropped twice today. It kind of stepped down twice, which is not a good sign. Let me go back to the daily chart real quick. It's going to come back and probably test the 200 moving average, which is around 46. Right now, it's around 48. So I think it might come back and test this. Let me check the float real quick. It's a high float. It's almost an OTC area float stock. 1.793 billion float. Jeez, that's a big float. All right, that's okay. In my opinion, I'm not touching it. I'm not touching it, and I can't touch it. I would say keep it a close eye on it. I wouldn't add it. I wouldn't add it here personally. I think that it's a doomed business. I think both of them are a doomed business. I think that is a doomed business, and so is Lyft and Uber Eats. While we're added to it, I think that they're both in bad shape. All right, let's see what's next. What's on the docket for tomorrow? Tomorrow we have one of my favorite gambling companies. Full transparency, I did open a position on them 2 days ago. I think it was yesterday or 2 days ago. It was yesterday. It was yesterday, right amidst the Janet Yellen red, which is what I'm calling it. I opened a position in Penn. I thought that it was a good buying opportunity for Penn. I think that the stock is undervalued versus DraftKings. We did a quick paper hand analysis on it here in an older stream that we did. So you can definitely probably go and watch that, but I'll go through Penn now. Let's go into Penn and take a look at them. And the big thing that I like about Penn, aside from their gambling, kind of their gambling business model, is around the fact that they brought Barstool in. Barstool is a Goliath advertising agency with a powerhouse like Portnoy behind it, with a powerhouse like the KFC podcast, and a bunch of other podcasts they have that I'm not going to say the names of the other podcasts on here because I don't want us to get demonetized in case that there's certain rules. I'm still getting used to YouTube's rules. I don't want to say certain names on here. I don't want to get demonetized. But let's take a look at see if there's any news coming out. There's a lot of block trades coming in from Penn. People are buying in, which is good. That's a 531,000 shares of Penn at $89.66, which is very, very, very that's a huge order. That's a really, really big order coming in right now. So that's big. We know there's a lot of gambling that's been going on Penn with all the events with Triller, all the boxing, all the UFC, all the different sports. March Madness, as you can see here. March Madness sports betting handles about an estimate of $1.6 billion. And that's across DraftKings, Penn. You got Golden Nugget that's also in there now. So we'll definitely have to see. Here's an earnings preview. Okay, that's weird. It's not letting me. Let me see. Probably opening it in another tab. Penn is scheduled for earnings estimate. The consensus is an estimate of 0.29, 100% beat year over year. A revenue estimate of 0.9% beat year over year. EBITDA of 393 million. Excuse me. Has beaten 50%. Yeah, I have really, really high hopes for Penn. And I'm really happy I opened a position. But let's take a look at it from a technical analysis perspective and take it from there. So Penn is very, very similar to what we talked about with Etsy. So Penn is one of those industries that, of course, popped because of the deal with Barstool, because it was very, very good deal that happened with Barstool, and B, it's been respecting this trend line across the board of the 200 moving average across the board, but this line here, which was broken just yesterday, which was why I took advantage and I jumped in yesterday, because hey, the trend line was broken for the first time in over a year now. We're in May. I keep losing track of my dates now, but we are seeing now that this has been broken and it recovered today, which is good. This area that I added personally, my average is around 89.86, I believe, or 89.50. It's one of those I scaled in a little bit. So I like it. I like it a lot. And I'm expecting a bump here. But again, one thing we have to realize is that Wall Street and the stock market is not performing to what it used to back in the day. And it's operating a lot differently now. Producer AB, thoughts on Penn?
I like the stock long term. It's still a little. It's expensive for me right now, so we'll see what it does after earnings tomorrow. Obviously could go up, 10% up to 100 easy if they report great earnings, and then I'll look silly for saying it's expensive because that will put it at a new price point. So who knows? But I do like the stock long term because they've got a lot of stuff going for them, as you've mentioned.
Sure. And what comparison? Because just I want to get into your head and understand a little bit, and that way we can probably use it as like a learning experience. Why do you think it's expensive?
Well, I think if you look at where Penn was trading, like if you go on the longer, like if you go to like the 5-year chart or whatever, and you look at kind of where it was trading pre-COVID.
I can give you a monthly chart.
Well, no, if you go down, so if you go down to,
Oh, you want pre-COVID? Okay, so let me just go daily chart and take you back to March.
if you go down to the bottom left, you hit like the 5-year. Yeah, you can see right there.
Okay, there we go.
So right before it dropped at COVID, I think it was trading at like 35 or $40 or something.
Yeah, it's in the 40 area.
More than double that. But obviously that I think that was right around the time they did acquire Barstool or bought a bunch of stake in Barstool. So it's hard to say, but what I do like about Penn right now is it's kind of got these multiple facets going. It's like as a reopening play, they own these casinos in Vegas that are going to be banging all summer, I think. And then they also obviously have the Barstool. So like, as you mentioned, between the podcast, the Barstool gambling app, all these different things going for them. It's interesting. Right. But yeah, it's kind of, I've been looking at some of these stocks that are trading like double what they were pre-COVID and figuring out if that's like for good reason or if it's just because we've had this crazy market run.
Right. Yeah. So they're currently sitting at a, we don't have the market cap here. We could do a quick calculation. So 100.
The market cap's right there under company and industry. I think it says it's about 13 or about 14 billion.
Oh, there it is. Sorry, I got to get my eyes checked out. They're playing games on. Yeah, so 13.9. So they're about a 14. Let's just round it. $14 billion market cap. Let's take a look at DraftKings, and then
the PE is only like 30. I mean, so the PE is not like crazy high, like some other.
Oh, what did I do? Okay. Yeah, sorry, I bounced out for a second. But yeah, the PE isn't too high. That's the so like DraftKings for some reason is valued about 22.5 bill, and then if you look at Penn, because DraftKings spends an insane amount of money on marketing, whereas like you have Penn where you just have Portnoy putting out a tweet and it goes to millions of people essentially for free if you think about it, right?
Well, what's crazy too about Penn is so it was one of the stocks that got crushed like the hardest when COVID hit. It went all the way down to like $8 or $9 or something. But what was really interesting is when COVID hit and everything, shut down, they had bought the Trop in Vegas, the Tropicana, like a big, mainstay casino out there. And they had bought that, I want to say, 5 or 6 years ago.
Right.
And then they sold it when COVID hit for a loss, like to free up some cash. And anytime a big company, sells a big real estate investment or any investment for a loss, it makes you think they like really needed the cash at the time, which maybe they did, and they freed up the cash and did great things with it. So yeah, again, I don't know exactly, if again this could go to 150 or it could come back down to 60 or to its pre, who knows? But I do like it long term. I'm just kind of staying on the sideline right now to see how it moves over the next month or so.
I totally agree with you. I do think that it's a little bit, for lack of a better word, expensive. But but comparing it to its peers, like for example, at DraftKings, it's trading at a discount if you look at it compared to DraftKings. And yeah, it came down to a low of $3.75.
Oh my god, that's lower than I even thought. Imagine getting into that at $4 and you just watch it ride all the way up.
And it ran to 140 at a certain point when they got into the S&P 500, 142. So Matt, that dude, there's some people bought down here. There's people that bought it and held it because they were smart. Because we saw the writing was on the wall that the U.S. government would have to open up gambling and cannabis because we have to cover all of this money printing and spending that we're doing in the form of taxes, and you can't just straight tax the hell out of people. So cannabis is coming up. We've seen it being legalized across many states. We've got gambling legislation that's just being passed like butter now. So I think that's what's really helping. Companies like Penn, DraftKings, Golden Nugget. Spence.
Yeah, it's not about Penn, but I feel terrible about DraftKings because I had a good buddy of mine. People ask you, should I buy this all the time? And this is right after the SPAC merger, and I said, I'm not. So take that for what you will. and I didn't. And he actually did buy a little bit, but he ended up selling a couple months later. But I was way wrong. I was way wrong on that one. So oops.
That's the hard part, man. It's like we have no way of knowing because, like, for example, when the market was dropping in February and March and Tesla was like 550, one of my buddies was like, "Should I just buy a bunch of Tesla?" And I was like, "I'm not sure if we're at the bottom yet. Scale in, but I'm not sure we're at the." He ended up not buying it.
Yeah.
But he never gave me any slack for, which I'm thankful.
Wait, and so Ryan, you're in New York, right? Or New Jersey?
Yep, I'm in New York. I'm in New York.
You're in New York, and gambling's not legal there, right? Yet, or it is?
So I know that we have, like, for example, in Yonkers, there's a casino, so you can legally go and gamble at the casino. I don't know about sports betting and online sports betting. I've never done it, so I'm not too sure to be 100% honest with you.
What's it called? Empire City? Is that it?
Empire City, yeah. I'm right by the racetrack.
Dude, I grew up hearing seeing those ads everywhere. Those ads are everywhere.
Were you in New York?
New Jersey.
Oh, nice.
Yeah.
Yeah, my thought on the whole, like, as you said, cannabis and gambling becoming legalized, states like Michigan that have both regulated and legalized are smart because it's one of those things where it's like people are going to do it anyway, right?
Right.
So I'm in Missouri and it's neither are legal, neither online sports gambling or cannabis. And, St. Louis is right on the border of Missouri and Illinois. So they have people going across the river to not only legally buy cannabis, but to place bets. And it's like, Missouri, what are you doing? You're just throwing taxpayer dollars away by not legalizing this and regulating it. So I think other states like Missouri that don't have it legalized are going to start looking around at these other states being like, wow, look how much revenue they're bringing in from these, markets, and they're going to get into it. And every single time, a new state legalizes gambling, but, you have the big ones. You have California and New York that will be bigger catalysts than, say, when Missouri eventually legalizes gambling. But that is something to look forward to if you do own these stocks.
Right. No, I agree. I think they should legalize it across the board. It's not something bad. Just have all the regular stuff built in there. Like you said, people are still going to do it. The country needs the taxpayer money off of it. It's a good source of money. It's like we saw March Madness brought in 1.6 billion in terms of gambling money. Just imagine taxing that at, what is it, 25%, whatever a capital gains tax that they're paying, and just do it off of that, and you can just make a ton of money that way. But I guess the government needs to update itself, and that's a bigger conversation, I guess.
Yeah, and I'm curious what Spencer has to say about, because I know Spencer holds a lot of these different cannabis companies, because the way I understand it is a lot of these companies are kind of restricted in that they can't operate, state to state until it's federally legalized. Mm-hmm. And then once that happens, obviously, then you can start seeing some of the cannabis specific companies operating more on a national. Is that right, Spencer?
Yeah, and before I get to that real fast, I see questions in the chat. We'll get to those, I promise. But yeah, I was talking to Bruce Linton yesterday, I think. Yeah, and Bruce Linton's a veteran of the cannabis space, and he made a quip. In the U.S., we call them multi-state operators, but cannabis isn't crossing state lines.
Right.
There's no cannabis crossing state lines in the U.S. legally, right? It's all just, you got your California market, you got your Colorado market, you got your Massachusetts market, Michigan, et cetera, et cetera, et cetera. So yeah, I'm long and strong the 4 largest MSOs, multi-state operators in the U.S. I'm long and strong, basically until we get legalization, until they uplist, and from there I'll have to reassess, the thesis. But the U.S. cannabis market is obviously the largest cannabis market in the world, and it's literally years behind Canada. So why pay a premium for canopy growth, even at the prices that they are now, like Kronos and your CGCs and your Auroras, your Tilrays? Even though they've come down so much, they're still at such a premium, and you've also got to deal with all that overhead supply from those buyers who bought, at the highs. Why deal with that? Why not just get in earlier for a company that frankly is already ahead of the game? Like all the U.S. companies are ahead of the Canadian companies in the U.S. These Canadian guys are going to cross the border eventually when they can, but the U.S. guys are already here. So why not go there first? So
what are those 4 companies that you were discussing, the big 4?
Yeah, the big 4 are Curaleaf, and actually, I highly doubt anybody on the stream, reads Barron's. But if you do, the front page of Barron's is still notable in the sense that it's sort of like the Sports Illustrated of the investing world, and if you're on the cover, it's it's notable. And the cover story over the weekend was about these MSOs, these 4 MSOs. Curaleaf, and I'll give you the tickers if you want. It's
sure, yes.
Curaleaf is CURLF. They're all on the OTC market. CURLF, Curaleaf. Cresco is CRLBF. Cresco. Green Thumb is GTBIF. And True Leaf is TCNNF. And those are the 4. And I've owned all of these for I think I probably bought a little bit before COVID.
But so Spencer, do you know, is Cresco only in Illinois?
Yeah. I think so the thing about all those 4 is each one of those 4 is dominant in a major market, right? So True Leaf, it like owns Florida, right? Cresco owns Illinois, for example. I have to admit I don't actually know the footprint of all 4 of those companies in every state. I just went when I was doing this research, over a year ago. I just went and I frankly kept it very simple. I looked at, okay, who are the largest players and who has like a lot of cash, and those are the ones and who has the largest footprint. Cash, valuation, and let's just start there. And those are it's basically those 4, and then there are a couple others that are like a step or 2 below them, and then there's everybody else, right? But they're the 4 largest, and that's what I wanted, because large in U.S. cannabis terms is small in real terms, small for everyone else.
Yeah, and so like down the road though, I'm just curious. So like when it does, assuming at some point cannabis does become federally legalized, are you looking for, say, True Leaf or Cresco to be like the Marlboro of cannabis? Like you go to a gas station or something, they just have Cresco stuff available.
Maybe. I don't know. I'm not going to pretend that I am like a balance sheet savant who can like go and find the winners. Nor am I going to pretend to be like a cannabis savant who knows who has the best products. I don't. Of the 4 companies that I just listed, to my knowledge, I've only consumed products from Cresco and actually I think just Cresco. I think maybe True Leaf.
Spence, why are you admitting that on our live stream, man? Jason hears it. He's going to send you to get tested.
We're in Michigan. It's legal now.
Oh,
yeah. So I don't have to worry about that.
It's hard to keep up with all 50 states playing different games.
Exactly. It is hard. So to answer your point, Aaron, I don't know. If it were up to me, if I could go back and do it again, or if I were someone listening or watching right now, what I would do is say, forget those 4. Just buy MSOS, which is an ETF, which owns, among others, these 4 companies. And the reason I don't own that is because the top 4 holdings in MSOS are the 4 that I just named, and collectively they make up like 40% of the fund. So for me, it'd be a little bit of a duplicate thing. But they're the 4 largest holdings in MSOS. So it's an ETF. It owns, technically speaking, it doesn't actually invest in the stocks. It owns swaps on them because they're not on exchanges. It's a whole thing. But the point is, when we do get legalization and when they do uplist to an exchange, the fund will be able to own these stocks, and then you're going to get the same exposure, just a little bit more broad. And that's my style, right? That's my style. I'm not trying to pick the winner. I'm trying to, or I'm not trying to hit a home run. I'm trying to hit a lot of singles. That's what I'm trying to do. A lot, and that's why I bought 4 of them. If I really was convicted, I would buy 1. But I don't know. I don't know who the winner is going to be. So I said, screw it. I'm buying all 4.
Well, it's never just one winner. It's never just one winner.
That's also true. That's also true.
It's also, I mean, I know I've talked about this stock before. I don't want to sound like a broken record, but a company like Scott's Miracle Grow, and Scott's has a bunch of subsidiaries that they do. They own companies that do like the hydroponics, the lights, all this stuff. And a company like that actually can operate, nationwide, state to state, because they're not doing the actual growing of the cannabis. Right. So I'd imagine this ETF probably owns. Maybe they don't own Scott's, but they might own some other companies like that are in the growing materials. Obviously, you have Grow G, which some people, equate to.
That's like the Home Depot for cannabis.
Yeah, the Home Depot, but I think Scott's even more so than Grow G, just because they have a bigger market cap and everything that they. If you look at, I'm just gonna pull it up real quick. All of Scott's subsidiaries.
Yeah,
While
so
you pull that up,
yeah, go ahead.
my big weed play that I've been kind of shoveling money into is SSPK, the SPAC merging with Weed Maps, because to me they're like the Square of cannabis. So they come in, you kind of franchise with them, and then they help you with all the legal paperwork and all the jargon and setting up all the online stores and all that with them, and then you kind of get thrown into a part of their network. So to me, that's the bet that I've made. But I like this MSOS ETF because for me, it was really hard to keep up with individual cannabis names and seeing what they're doing. So I think MSOS for me is a better investment, and it also saves me time to just get more exposure to the cannabis sector in my port.
The problem with like all these companies with like, you know, real world equivalents, like the Home Depot for cannabis, the Square of cannabis, is eventually we're going to get legalization, and or even before that, we're going to get the Safe Banking Act, and then all the handcuffs are going to be off, and then there's no reason that Square can't be the Square of cannabis, or Home Depot can be the Home Depot of cannabis, right? Like it's Home Depot, right? So that's my problem with all these companies that for the moment have an advantage, but that advantage is going to go away, I think, whenever we get legalization.
Right.
So that's just my problem. Dylan Carson loves True Leave in Florida. Hey man, I'm with you.
So look, real quick, if you just go to Scott's like website, you go to Who We Are brands right here. Yeah, they've got their lawn care brands. Yeah, they've got their gardening brands. But look, they've got the hydroponics, growing indoors, provides year round. And all these are different companies that Scott's runs. And I don't know if every single one of these is involved in the marijuana, but you know, they like you click on general hydroponics. This is just growing. I mean, all these, this is what Scott's does, and they own all these companies. And so, like I said, these have the benefit right now of while we're still under this, you know, embargo of no federal marijuana, that they can still sell the hydroponics state to state. And that's just
a back door, essentially.
Yeah, it's like a shovel play. Oh wait, it didn't start sharing when I went to the new. All right, here, wait. Now I gotta do this.
No, you are sharing.
No, I know, but it didn't go to the when I clicked on the actual subsidiary.
Picks and shovels. So yeah, so that's my cannabis thesis. It's relatively simple. I'm basically betting on legalization, and I'm betting on an uplist when that happens, and I'm betting that the four largest names now are going to be best positioned to benefit when all that happens. So it's not the most complicated thesis. I haven't looked at a balance sheet for any company, any of those four in a year, probably. I like to take a brief gander if I can, but I'm not going to pretend that I understand all of it, which I don't. So, that's pretty much it.
That was a great take on the whole cannabis space, though.
Yeah, Dylan's asking Scott's is an SMG. Yes, SMG is the ticker for Scott's Miracle Grow.
I just want to add, like, my cannabis, like, my thoughts on it have stemmed from, being at Benzinga. We were definitely like one of, if not the first news outlet to cover cannabis from a business and from a marketing standpoint. We've been covering cannabis markets for like 8 years, right? Like before there was any cannabis stocks, like on any exchanges, we were covering it, right? And through that, I find myself at cannabis events that we put on, our Cannabis Capital Conference, and you find yourself listening to these investor presentations, and the first time you're like, wow, this sounds amazing. And then, the third time you're like, okay, well, they all sound good. So they all clearly can't be good. Some of them have to suck. They can't all be winners. But, it just comes from exposure to the space and going through investor decks and listening to these executives speak and seeing what works and what doesn't. I remember I was super bullish on this one company, MedMen, which is still around. They're still around. And their whole thesis was, we have the best real estate. It was a cannabis. They were a dispensary. The ticker was MMN. Was MMNFF? Yeah, MMNFF, MedMen Enterprises, and Mary, Nancy, Foxtrot. And their whole thing was, we are a dispensary. We have the best real estate. We're in Times Square. We're in LA. We are where the people are. And I walked out of that and I was like, damn, like I should buy this thing. And I never did, thankfully. and what ended up happening is they had to just sell off all those assets. But you learn what works and what doesn't.
Right.
And it doesn't help in this case that cannabis has been a highly cyclical play. Sometimes it's like super in favor, and other times it's really not. The last year has been great, obviously. The February bubble notwithstanding, but
And that wasn't the first cannabis bubble, right, Spencer?
oh, that was at the fifth.
You've been through a couple of those, huh?
Yeah. Cannabis has gotten crushed a few times. It's kind of like Bitcoin in that way.
So, but now do you have this ETF in your portfolio, MSOS?
No, I don't. Only because, as I said, I own.
You already have, yeah.
I own the top 4. I honestly, I probably should buy it only because there's a bunch of stuff in there that I would like to own, like IIPR, which I like, Jushi, which I like. There's other stuff in there that I like that I don't own. So for that reason, I may well just, rather than buy more, I thought about buying more. I might just, rather than do that, I might just buy the MSOS instead, which I haven't done yet. But I don't know.
I think MSOS is a good exposure ETF to throw into like an IRA if you want a cannabis exposure.
Oh, sure. I agree with that. I agree with that.
Because for me, like for like the crypto space where I'm big on, I'm forced to like use something like coin because we don't have an ETF. There's no like crypto ETFs yet.
There's no ETFs, but there's like blockchain ETFs, just BLOK, right? Which is not quite the same. There will be an ETF soon. I don't know when.
You don't have the insider information for us, Spence?
I've asked everyone that question, and no one seems to know. So, yeah.
Hopefully soon.
Yeah.
Let's jump into some questions from the chat. We got some good tickers people were asking about.
Someone asked about Tesla a lot. Naveed.
Yes. Naveed was losing his mind over Tesla. So let's talk about Tesla. I think Tesla's okay. I think Tesla's doing fine. I added more right before the stream. I added at 669 again. I've just been adding on all these dips because, in my opinion, I think Tesla's okay. It's just struggling a bit as everyone else is. They got that news about some factory, I think it was in China or something, that won't be able to start producing for a little bit longer than expected. They haven't been affected by the chip shortage yet. They'll probably be affected by them soon. I think they're just covering it up right now, not nefariously, but probably because they're probably doing okay with it for now. But can't find the exact news article on it. But I think Tesla's, their shares trading loading among market weakness. The stock has continued lower last week's earnings. Last week's earnings were okay. They were good earnings, but there was just no real news that people wanted to latch onto and kind of use that as kind of a propeller of saying, hey, this is where Tesla's going. But in my opinion, if you look at the earnings, the Model S and X weren't included in this earnings. And then after that, you still beat the car numbers. You still beat the revenue numbers. Margins got better even without the government credits. We went from 20 to 22% without government credits. So I think once you have all 4 models, the SEXY in there, and then you have the Cybertruck eventually coming next year, I think that they're setting themselves up to be a good company. I think in this area, I think the price is fine. I'd like it cheaper, but I mean, in my opinion, I'm future forward buying this in hopes of when the stock goes back to a $800,000-$900,000 share price, which I think it could easily get back to because there's so much of this company that most people A, don't understand, B, don't account for. That's just my take on it. What do you guys think?
Well, my question with the Tesla, and this relates a little bit to that high price and like Kathy Wood's price target, is I remember looking at her latest model, and there are some pretty serious assumptions baked into that, especially with regards to the insurance business. So I don't know. I honestly, I don't know. I've had a lot of people ask me about Tesla. Like, do I think it's going up? And whatever I tell them is wrong. So like, I don't know.
So I have a question for you, Ryan, about Tesla.
Sure.
Since you're a big, Tesla bull, you own shares. A lot of people, that love Tesla, the classic line is, oh, it's not just about the cars. Like it's going to be, this whole thing. How would you feel? Would you become more like bearish on Tesla if, say, Elon steps down as CEO like Bezos did at Amazon?
A lot of people have been asking me that question this past week because I've been talking to a lot of people about Tesla.
Really?
Honestly, I would lose faith in it I would lose faith in it because I think Amazon can operate without Bezos. But to me, what happens to Tesla if Elon leaves is the same thing that happened to Apple when Steve Jobs passed away and Tim Cook took over. The innovation aspect, the innovation heart behind it will fade. It will go into focusing more on a business rather than innovation.
Yeah.
That's the unfortunate thing that I see happening. I don't see a Cybertruck or a new Roadster coming out of Tesla if Elon's not there. I don't see new innovations coming out or them pushing the buck. It'll be more about increasing margins, making better profit margins, making better revenue numbers, finding ways to cut corners and stuff like that. So in my opinion, I think Tesla without Elon is in trouble. And I think Elon knows that too. I think Elon's been on the record saying he hates the fact that it's a publicly traded company. And personally, in my opinion, I'd much rather Tesla not be a profitable company and have a lower stock price for the next 1 to 2 years and pump out innovations across EVs and chargings and batteries, Starlink, solar panels, all this other stuff, especially with the Neuralink stuff that they're doing. Because I still incorporate that into Tesla because the funds that Elon takes, he puts into those other companies as well. I'd much rather that. And Elon pushes the buck there and ignore the business side. That's why I was a little bit disappointed. And when they were added to the S&P 500, yes, it helped the stock price. It helped me in my portfolio a lot. But I would have much preferred if Tesla remained. If it was a private company they could privately invest in, that would be fantastic because then you don't have to deal with all the crap of every time there's a car crash or something that goes wrong with a Tesla, the stock takes a dive. But to me, Tesla and Elon are like they're like hand in glove. They go together, and once that is broken up, I don't know who would take Elon's place, and there'd be a lot of confidence lost in the company, in my opinion. And personally, the whole Tesla hive mind cult stock behind it would also be disappointed because everyone's itching or chomping at the bit. Oh, can Starlink IPO? Can Boring Company IPO? Can Neuralink IPO? We'll buy into it just because of the faith that we all have in Elon. And he's delivered. Credit to him, he's delivered time and time again. Even with Battery Day last year, a lot of people were disappointed because they didn't really understand what he was saying. But if you sit down and kind of flesh out everything he was discussing, it was innovations that are remarkable. But to like a non-engineering mind, it's boring and it's hard to understand. And Elon's not the best person to articulate these sort of things. He's not a great public speaker. But I think the future is bright for Tesla with Elon. Without Elon, I'd have to definitely reevaluate, and I wouldn't be as confident, to be 100% transparent.
Yeah, I mean, I know I think Tesla's obviously like one of the most polarizing companies and stocks out there, and Elon even more so might be more polarizing. People either love him or hate him. I think Tesla would be more enticing to me without Elon. But that's just my take.
Wow. Elaborate on that for me. I'm really curious to learn more.
All right, we do got to wrap up. We got Money Mitch starting, but I see the similarities between Steve Jobs and Elon Musk, but I think one of the main differences, it seems like to me that Elon has become like really infatuated with seeking out this attention stuff, like him going on SNL and all this stuff, and you just didn't see Steve Jobs doing that stuff, and it just kind of over time it's like rubbed me the wrong way. Like 5 years ago I was like, oh, Elon's like the smartest guy in the world, and then now like the more and more I watch his tweets and stuff, I'm like, I just started to lose some lose some faith in Elon himself. But I do like Tesla.
Become very Mark Cuban-esque, essentially.
Yeah. I don't know.
All right, wait, let's wrap it up because it's Money Mitch time. Let's wrap it up.
All right.
Either way,
folks,
Tesla, Elon, it's fun to watch. We'll see what happens.
Folks, thank you so much for watching After Hours. Hopefully we'll be on very soon again. Thank you to producer AB and producer Spencer for everything. And if you want to follow me, all my links are at ryanstocks.com. You can hit me up there. I've got YouTube, Patreon, Twitter. We can continue the conversation there. Thank you guys for having me on the network. And thank you to everyone who's watching. Don't forget to like and subscribe and go check out Money Mitch. The show is fantastic.
Yes, sir. I just linked Ryan's Twitter in the chat. So go give him a follow there. If we didn't get to your tickers, tweet at Ryan and he'll get to you there.
Or tune in next time.
Who's ending the stream?